Hey, welcome to the Closing Beat, everybody. Happy Wednesday to you. How's it going out there? All's good? Good. Glad to hear it. Welcome to, and now he sits down. Now he's right there, just sitting calmly there. Welcome to our show. We're financial advisors here at Jazz Wealth. Hope you check us out at jazzwealth.com. While other advisors are playing checkers, we are playing chess. And I'm reminded of a quote. Today I'll give you a quote that I got from the chief of the Seminole Indians. It is, be thankful for what you have, but fight to be better. Huh? He likes it. Yeah. Anyways, let's talk about the markets here today. We've got a lot going on. It's earnings season, getting into the thick of that one there. All in all, the Israel war issue over there is less stable than it was. You see a little of that translating into the stock market as well as into oil prices here today, just slightly higher there. Each other are blaming each other for the bomb and the thing that went off in Gaza at a hospital and the civilians. I don't follow it that closely. I just saw they were blaming each other there for that. One thing you can bet on, though, there's no ground invasion. It's going to be happening anytime soon while Biden's there, right? And then that brings that into question. Side note, I see that Biden says, oh, we're going to give you $100 million for humanitarian efforts, rebuilding and all that stuff. How is it $100 million? Anybody ask that question? Like, why isn't it $90 million? $50 million? $200 million? Like, how did we come up with $100 million? I'm always fascinated by that when they're like, we're sending $1 billion here. It's like, why $1 billion? What happened? Why is it not more? And who's deciding what these numbers are? Anyways, if you look at the price of oil, that did react accordingly here today. I just got logged out for some reason. And so not much to go on there. We're still at that cup half full, half empty that we talked about yesterday, so no new surprises there. If we go over to the S&P, ta-da, there you go. Moving back towards the low end of the range. Remember, we talked about this yesterday. 1, 2, 3, 4, 5, 6 now days where we're essentially trading in a range a little bit weaker than we would have liked to have seen today, but not a good start to earnings season. If you're following along with earnings season there so far, less than half the companies, it's early, totally early. Less than half the companies that have reported have beat. Not going well. Netflix and Tesla out after hours. I see Tesla missed. I haven't looked at Netflix just yet, so I won't be a good source for that information there. If we look at the S&P today, look at what happened. You know, and I'm going to go to the SPY so you can follow along here. Every rally today failed. As far as like a 5-minute time period goes, you see that perfect downtrend? They would call it an algorithmic downtrend, meaning we start the day here. We got a rally back up to the top of this downtrend. Oh, sold off. All right. Another attempt randomly throughout the day. Oh, failed off. Didn't make it. Sell off. Quick reversal. Oh, nope. Top of the downtrend there. Really bad. We sell off into the close. So every single rally today failed. Every bounce failed. Every attempt to move higher failed. And that is across the S&P. Financials kicking off earnings there. Morgan Stanley, one that we happen to own today. That's not a good sign there. Broke to new lows. It's very extended in the short term. Earnings were 6% higher, but it's because of all of cost cutting. If you look inside of their earnings report, some hits, some misses there. But the reason that they beat on earnings is just because they cut costs. That's not a sustainable thing. Investors don't want to see that. We want to see that you're beating on earnings because you have more sales. You're able to control your costs while growing. And you're just not seeing that at the moment from Morgan Stanley. The others, not doing so well either. I'm always fascinated by the wealth management revenues that they bring in there, 3% lower. And they said the market environment remained kind of mixed this quarter. So they weren't trying to sound scary. They weren't trying to sound optimistic and making excuses for whatever happened there. They're just saying, it's just kind of mixed out there. That's not good enough. And so investors sold off that stock in the short term. The S&P, we already mentioned, back to the low end of this range. If you were to zoom in like we just did, got a little downtrend kind of happening. You could probably use something like hourly time. Yeah, you kind of use an hourly time period. It's not great, but nonetheless, still going on. That's what's going on there. The NASDAQ, same thing. Remember, the NASDAQ was already kind of in a short-term downtrend anyways. Wasn't really putting in that range there. More of that continued today with the big names moving lower. The Dow potentially reversing course, putting in its new lower high. We'll have to see what happens there. I expect the rest of the week to be choppy. Tomorrow you have the Fed member. Well, you have a lot of Fed members speaking, but you have Jerome Powell speaking. So we've got 1, 2, 3, 4, 5, 6, 7 Fed members speaking tomorrow. One of them happens to be Jerome Powell, who will get all the attention. I believe he's speaking in New York. You ever wonder, do you ever see him on a commercial flight? How does he get around? What's his airplane? He's obviously flying private, right? You don't see him at the airport walking through security and stuff. What's going on there? A little bit curious about that one. Anyways, moving on. Gold, actually kind of an interesting move here today. I thought was interesting. Tried to break above the highs, closed below them there. So not quite broken out just yet. Also, you have to use the analogy of, okay, we sold off. Get it. It was oversold. The rally, imagine yourself running up a hill, very steep hill. You can run up that steep hill probably quite a bit, and then you're going to get tired. Stocks are no different. Commodities are no different. Indices, Forex, anything like that. Whenever it runs up a steep hill real quick, you've got to be suspect of that. That doesn't mean it can't just blast off. It just means that would be really rare if something like that happened. And if you're a betting person, then you probably wouldn't want to bet on that too much. Volatility creeping higher as well, getting back towards the highs. We know that that's totally normal because for October, volatility is supposed to be a little bit wider there, so no problems there. The CBO says the debt to GDP, I found this data here, actually. The debt to GDP has averaged 43% from 1970 to 2019. Remember, because yesterday we talked about the bond issue, the supply issue going on out there. The CBO says, well, from 1970 to 2019, we've averaged 43% debt to GDP. Just how much debt do we have relative to the value of everything that we do here in the United States? We get up and we go to work, we produce stuff, we sell services and time and widgets and all that happy stuff. What's the value of that? They said, well, our debt is 43% of the value that we bring in. It's sort of similar to saying you make $100,000 a year. $43,000 a year goes to debt. Yeah, that's tricky, right? That's probably, towards the really high end of things. Anyways, the CBO says, by 2025, that number will be 100%, meaning you make $100,000 a year and $100,000 of it goes to debt, not interest, just debt, right? Debt and interest, right? So a combination there. Won't be hard. If you look, as of last month, the debt to GDP ratio is 98%. So all of you doom and gloomers out there, you recession people, that, oh my God, this is going to be nasty. It's 98% now. It says, well, we'll be at 25, by 2025, we'll be at 100%. It's definitely not good. And they also said by 2035, on this continued pace here, we'll be at 123%. Again, you make 100,000. But your debt is 123,000. As an individual, we know that's not sustainable. 43% is really not all attractive either, but 100%, 123%. What's going on? What are we going to do about that? So keep that in mind when the election season comes up here. Okay. Let's hit bonds real quick. Broken record. I don't know what else you want me to say. New lows here. The 30-year national average of mortgage rates officially hit 8%. That's a snowman. You ever played golf? You had to write down an 8. I'm a big fan of writing down 8s. We call that a snowman. If you are a senior in college or younger, you've in fact never seen a snowman as far as mortgage rates go. So congratulations. You're getting to see something, unique. So on TV, if you buy a $400,000 house, it's going to cost you $1,000 more a month than it would have 2 years ago. Do a little math there. If you buy an $800,000 house, congratulations, that's a nice house. Depending on where you live, you're going to spend $2,000 more per month than you would have 2 years ago. Those are two things that I'm sharing with you that are not the best of news. What do you think? All right, Spirit Aerosystems. We happen to own this one. Bought it a little bit early. It's not the best for us so far, but it is the best performer today for us. Spirit AeroSystems had a lot of bad news, but for whatever reason, the stock went up, and I am not complaining. NVIDIA, this is yesterday's news. Remember the thing yesterday, the ban on Chinese imports of the chips. NVIDIA said specifically, it's not really going to be a significant impact to our earnings results, so don't panic about that. Nonetheless, the stock was down. Procter & Gamble, this was nice. So we happen to own this stock as well. For Procter & Gamble, you know, Kellogg, Coca-Cola, Pepsi, Altria, things like that. It's not a growth stock, right? So we're not interested in seeing that, oh man, like they just killed it, like they've got so much more business. We're looking at organic growth. These are companies that can't, I mean, they advertise, but more advertising doesn't generate into a linear growth response for them, right? That's why you don't see that constant commercials there. Anyways, organic growth is what we focus on. 7% versus basically 5% what they were looking for there. That was awesome. So good news there, probably reason why the stock went higher. The beauty segment of Procter & Gamble, you know, the beauty segment, 100% of the earnings beat in that segment of their business was due to price increases, meaning they raised prices, they made more money, and none of us said anything about it. We just kept buying it, right? Goes back to the retail sales that we saw the other day. So it's good news for them. I'm not complaining or anything. I think that's good news for them. Abbott Labs, better than expected earnings. They raised their guidance going forward. It was already sold off. That's good enough news to get people to say, I'm interested. I'd like to buy some. That's a long-term holding for us. So we're still doing good there, but we'd like to see it bounce on that one for sure. ASML, I'm pointing this one out because I get a lot of questions about Taiwan and China and the ban on the imports and everything. ASML is really the one you want to look at. It's a Dutch company here, and 46% of their orders, they call it bookings, but we'll say orders, are from China. These guys have a lot of geopolitical risk, right? That sensitivity to what could be said by the U.S., China, Taiwan, etc. So if you're looking at something that could be more chaotic based on what happens, ASML is probably the one you want to look at. NVIDIA is the one that probably won't be hit as much. ASML did come out with their earnings, and basically they said, we'll just call this a transition year. You know what I mean? China's a lot of our sales, got a lot of risk going on here. Let's just call it a transition year. Hope things smooth over and everything is good there, if that's how you want to interpret it. Okay, Ally is up next. I get this question a lot, so I thought I'd share Ally here. I thought it was interesting. This wasn't really a major headline today. Lenders, banks, big lenders, small lenders, they all have what we call loan loss provisions. They set aside, credit cards do the same. They set aside some money, assuming that the odds are not everybody is going to pay back their debts in full. Some may get behind, some may never pay, right? They understand that. So a lot of these are unsecured loans. And so Ally comes out and says, we're going to raise our, they have to actually itemize this on their balance sheet. We're going to raise our loan loss provisions by 16%. 16%. Is that good or bad? It's not good. That means they know that this isn't going. They see the delinquencies building, right? So they're building those loan loss provisions. Also, I might add that total deposits 2% lower there. That's just because bonds and money markets are taking away share from people that say, I'll put money in a high yield savings account. It is now more competitive to use money market funds, almost use the short-term bonds and things like that. UBS is a large lender, right? You know who they are. They took a different approach. They said our total charge-offs. So we have loan loss provisions, which is like just cash, just in case things get a little rough. We have the cash to offset some of that. Well, if they offset that, they call them charge-offs. So UBS said our charge-offs were 11% higher than expected. Not 11%, 11% higher than expected, right? Is that a sign? Is all of that a sign of really good things in here in the really short term? Like, is all of that kind of like building towards a good argument? We have 8% mortgage rates, money going out for wars and everything. You got the Fed speaking. They're just going to change their language to higher for longer. They're going to use a lot of that in there. Hey, you know what I mean? Right? People aren't paying back their debts. These little tiny things are what helps you kind of go, okay, it's not great. It's not doom and gloom necessarily, but it's not great. So careful what you're doing out there. All right. Also, I mentioned the Fed president speaking tomorrow. That will be the focus. That will likely be carried live, the whole entire speech. And then you'll get all the headlines afterwards. I'll take your questions if you have any. Tonight on Jazz After Dark, we're going to cover growth versus value stocks. Which one's better? Like from a data standpoint, which one's better? Let's just figure it out, right? So we're going to go through that, and I'll tell you a little trick that the media likes to use. It's not a conspiracy. They just actually do it this way, and we'll get to show that as well. Tomorrow, you got American Airlines. That was not good for them today, or airlines in general. You got American Airlines, Alaska Airlines. Other transports include Union Pacific and CSX, by the way, in terms of earnings. You'll have Philip Morris coming out, Pool Corp, somewhat recent addition to the S&P. Truist Financial, I mentioned Union Pacific. Yeah, I mean, that's pretty much what's happening tomorrow. American Airlines beats 90% of the time. The stock is about mixed 4 of the last 8 times, 50-50 shot that it's going to be positive. Alaska Airlines a little bit worse. Who is the worst, by the way, tomorrow? Just in case you happen to own it. Looks like Pool Corp. Pool Corp has been down 6 of the last earnings reports. So maybe, you contrarian, you want to try a little something different there? Maybe. All right, see what questions you happen to have there. Other guy says, well, maybe we shouldn't be funding so much stuff. I'm all for helping people in need. I just want to know how they come up with a number. I'd be that guy going, hey, cool, that's nice. You want to help them out. Totally on board with that. How we come up with 100 million? Does anybody know? That question will never be asked. You can't answer it. What's the bad comparison? Taxes are the country's income, not GDP, and debt is not how much is going into debt all year. It's total liabilities. I could make it even worse for you. Medicare, Medicaid, Social Security, and food stamps make up all the tax receipts that come in now, 100% of it. It's been like that for a little bit, but that's going to become more popular as people go, wait a minute, we got more money going out. So there you go. Mark with the random comment. Spirit's a terrible airline. I disagree a little bit. Spirit is what it is. If you go into it knowing it is what it is, you just go, We flew at one time to Minneapolis. It was like $40 a ticket. We knew, right? You don't go into it expecting the fanciness and candles to be lit and everything. So I think it's, a give and take there. Yeah. Small cap value, best. Small cap growth, worse. Large caps are basically equal. Well, we're going to cover that tonight. I'll actually go through growth and value. We'll take a look and see, give some examples and stuff like that so you can see. United was the reason for airlines to pretty much have a rough day today. Yeah. One party's let us know we don't pay our debt, student loans, rent, mortgage bailouts. Oh, I started a politics thing there. I see what's going on. Hey, Dustin finally broke down and sold puts on a TLT today. Ooh, you took your shot. Okay. You took your shot. So you're at $80. Not bad. All right. Out of the money there. December, $1.20. Can't imagine much more downside. Right. I mean, I would have said that a month ago. So I'm in no position to be giving advice on that one because you'd have got me. You'd have got me a month ago. If you didn't get me a month ago, I'll tell you what, you'd have got me right in here. And it would have been right there. Not the low. It'd be wrong of me to say this. I would have picked this right here. This would have been me. And for one day, I'd have thought, yay. And then I'd be right over here. Yeah, I'm with you. Like, how much more can you take? Especially when the Fed starts talking, saying because there's pricing in them raising rates again. What if they say, we're going to monitor, but we're good. We're good right here. That might be helpful. Especially if things get a little rough overseas. You know what I'm talking about? What indicators do you look for in a falling knife stock like PayPal to start a position? You mean like if you're trying to quickly scan, PayPal would not be one that would come up on the scan. You'd look at something like this. So this is an old example. I just happen to think of the stock here. This is falling knife. PayPal is just gradual downtrend, very shallow downtrend. So if you're going to set some kind of a scan or use a free scanner or something, the easiest thing to do if you want this kind of stuff is to say, show me price relative to, and just pick a moving average. Most people use the 50. It's probably one that's in the free scanners. So you'd say price further than minus 10% from the blue line. You know what I mean? And then you would only get stocks that have moved like that. You could get something like, I don't have an example. You could get something like this, where at one point it was that far. However, it just took a lot of time to do it. So if you're using a scanner and you can say, show me stocks that are 10% or more away from the 50-day moving average within the last 10 days, 20 days, something like that. But that's the easiest way to do it if you're not wanting to spend money on fancy scanners and stuff. Staples discretionary outperforming last few days. I think this will continue. Take a look. Well, you see money trying to go back in dividend stocks. I'm a little leery about that, but you do, and I say that interchangeably with Staples, you do see that. I'm just a little leery, right? It's kind of like when you think oil's bouncing, you don't want to go against the trend. So that is on the radar. It's just I'm not ready to call it yet. Yeah. You love the 41-year-old example video today. Yeah, I thought that was cool. And that was actually truthfully based on my friend. So I had the data there, and that's it. Ooh, Mark's had enough, man. Spirit changed my flight 20 hours prior to a 12 hours earlier. Ruined the whole trip. Again, if you go into it knowing that, you know, that's a real possibility. That's a horrible thing. I'm not laughing at you, but, you know, if you go into it and just get rid of your expectations, don't lower them, just get rid of them, probably have a good time. And sadly, you book an airline ticket, you also book a rental car at the same time just in case you got to drive, huh? Sorry to hear that. What indicator do you trust the most to add to positions? All those technical indicators or what? I'm a price guy. I layer this stuff for you guys. I've just seen you comment on them. I don't really look at this often. I like for longer term investments you're thinking value or discounted. Maybe the 200-day I would use, but all the other stuff is purely just for you guys. I just like to watch price. It's kind of like, you know, if I'm used to looking at the same stuff every day, every stock, I just love looking through them, and it gets stuck in your head. Like if you were a bartender, right, and you were buying the things for your bar, you would know if prices change day to day because you're just doing it every day. So for me, I don't have there's no magic indicator there. I do like when they all come together, when everybody who follows this, moving averages, fundamentals, discounts, value, if you want to use any kind of fundamentals, the moving averages and your MACDs and all that stuff, when all that comes together, well, now it doesn't matter what you think. It's all those different categories of people going, yeah, because my indicator said buy, I'll buy. When that coincides with a breakout or something, that to me is really cool. Yeah. Oh, yeah. Remember, I like talking day to day. We don't invest day to day. We're longer term investors. I just like following everything day to day because, well, these little stocks are like puppies in a room. They're going all over the place lately, and you got to keep track of that sort of thing. Yeah. Okay. What else? I covered everything. I did it. You got your snowman there for the mortgage rate. Hopefully that doesn't stay like that, but sorry that it is. You guys enjoy the rest of your day, and we'll see you later on Jazz After Dark. Huh? YouTube. Be live right here.